Two ignorant humans talking about stuff.
So 2008, 2009, we have this housing market crash because of the bubble, right? And there's a whole lot of reasons why and how, and, go watch The Big Short. It's a great movie about it. It's got a lot of
absolutely
accurate portrayals of what went down. But one of the things that really affected how all this went was, and you remember people were losing their 401ks, pension funds, things of this nature, right? Well, do you remember why, especially when it came to pension funds, why people were losing those? Do you remember?
No, I can't remember.
So basically what was happening is you were having large hedge funds come in and buying up these mortgage-backed securities on these bad mortgages, right? So they were creating
right.
funds that were built off of these bad mortgages that were issued, right? And so what was going on is that, I don't know if people know how this works, but, if you work for the, Nashville Police Department or Dallas Police Department or Fire Department or whoever, some kind of public entity that pays out a pension, okay?
Right.
Well, they collect, obviously, money from tax revenue and whatnot, and that helps to go pay those pensions. But they also have to take those funds and they have to grow them, because in order for that money to be there when you retire as a police officer at 65 or whatever, that money has to have grown over a period of time so you can get paid, for the rest of your life, essentially.
Yeah, 2% a year is just par.
Right, exactly. So what your government entities will do is they will go hire out pension funds, or hedge funds or EFTs or REITs or whatever. They'll go out and hire companies to then take that money and invest it somewhere in the market, right? And I don't mean necessarily the stock market. It could be any facet of the market.
Right.
In order to take that money and get a rate of return, usually they're looking, I think it's like +6 or something like that, to be able to get enough to be able to cover those pensions as they continue to grow.
Right.
So that's the idea behind how this works. So I don't know if people realize this, but what that means a lot of time is now you're talking about public money, right? Which is tax revenue going to pay pensions for public service employees, teachers, doctors, whatever. Fire department, police department. And then that public money is then being invested by a private equity firm to grow.
Right.
Okay. So, there's good and bad, all of that stuff, just like anything else in life. But the ultimate point is that that's kind of what was used to grow that money so you could get there.
Right.
Well, so when they were investing in those mortgage-backed securities and buying those up and bonds and driving rates and building these funds based off bad loans, then what happened is when that crashed, people lost pension funds, money fell out because, it just didn't go well. So I'm getting all this to basically just say, all right, so nowadays we're in a world, and this affects, it's funny because this article we're about to pull up mentions Texas and Nashville specifically in the article. And what's happening right now is...
Whoa. They mentioned Texas and Nashville.
Well, it's Houston. Okay. Yeah, they talk about Houston. I'm not in Houston. I'm in Dallas, but
okay. Sorry, I just wanted to clarify that for the people.
Yeah. So basically, when normal housing market, right? You and I, even with rates low, most of the people that we talk to are people. They're families. They're moms, dads, brothers. Whatever. They're trying to buy their home as an individual family, right? And we've always had a certain amount of the market that was dominated, or not dominated, but that was brought in by investors, right? We would have people that would buy properties specifically to rent them out. They weren't planning on living there. It's an investment property. You can park your money, that kind of thing. Well, that's all well and good, and there's always been a competitive market that's been going on because of that, right? Well, now we have a whole new player in the market that I don't think people are fully aware of what they're competing against now. All right, so now you can pop that up here for me.
All right, here we go.
We'll just leave it up here for a second. But nowadays, okay, if you're buying a house anywhere in the United States, okay, you are now competing in this article, it says somewhere between 25 to 30% of the offers you're competing against large pension funds. Okay, so you're not just competing against your neighbor or your friend or some stranger or even an investor, an individual investor. Now you're competing against pension funds. Okay,
and
so
the idea is buy something that appreciates, right?
Correct. Well, it's not just that. No, that's actually not, because you cannot reap the gains of real estate that appreciates until what happens?
Till you sell it.
Till you sell it. So otherwise, that money's just sitting there, right? It's not going anywhere. Well, that's not what they're doing. They are buying these properties and then they are turning them into rentals. And the rental revenue that they earn is what is going to build these pension funds. Okay. So again, I'm not going to argue the positive or negative of this, but just to read you, I'm going to read just for a second this first part of this article. And it says, a bidding war broke out this winter in a new subdivision in North Houston. So this is in Texas. But the prize this time was the entire subdivision, not just a single suburban house, illustrating the rise of big investors as a potent new force in the U.S. housing market. D.R. Horton, okay, everybody's heard of D.R. Horton, built 124 houses in Conroe, Texas, rented them out. So D.R. didn't sell them to individuals themselves. They rented it out. And then they put the whole community, it's called Amber Pines at Foster's Ridge. They put the whole community on for sale. So, and then it says a who's who of investors, home rental firms flocked to the December sale. The winning $32 million bid came from an online property investing platform called Fundrise LLC, which manages more than $1 billion on behalf of 150,000 individuals' pension funds. Okay.
Yeah.
So now you have entire neighborhoods that are being sold as one block to large corporations, basically not even getting the house on the market. So even if you wanted to go buy it and take your family there, you're all right.
But let's look at the bigger picture, because we've all heard the whole, hey, I made an offer on this house. I got beat out by cash offer. It's funny how all of a sudden everybody has cash. Well, that's not the case. You're dealing with these type of situations.
Yes.
Now, they don't always buy whole neighborhoods, kind of deal. They might go in and just see an opportunity in a niche market. So Mandy and I were down at Marco Island, and we were just kind of looking at properties and whatnot. And one of the things that we heard them talk about was these high rises, like you see in Panama City Beach, and probably down in what's the beach in Texas? I always
Galveston or
Austin and down in
Crystal
there.
Beach, Corpus Christi.
Crystal Beach. You got those Corpus Christi. That's what I was thinking. You got all the high rises there. They kind of find a niche and they say, look, I might not buy the whole thing, but most of them that come on, I'm just going to put an offer on them. If we get it, that's fine. And they just put that into their, like you said, the $1 billion fund. Now, so I guess my question is, why do you see that as bad? But you're saying because the opportunity for the little guy to buy a house?
Yes. So look, again, I have my opinions on this kind of stuff, but I'm all for, competition and free market. Don't get me wrong. However, there does come a point where the scales are tipped so heavily in one direction that you and I and the average homeowner, they can't compete. They can't even get a chance to buy the house. And our entire, our American dream, whatever you want to call it, is built primarily on home ownership. When you look at what drives our GDP, when people go and do home improvements, when they pay utility, they do all of these things. It's all built around home ownership, right? So if we're getting to a point where we're now, as an individual, I'm competing with BlackRock Financial, who's got a, 20, 30, $300 billion worth of money that they can just throw around and invest at any point. How am I going to compete in that market to get the house for my family that I'm just trying to get started, right?
Yeah.
So that's my problem with it is not so much, look, I get you have to find a segment of the market to grow in order to grow funds and these different pension funds and, like I said, REITs and ETFs and all this kind of stuff. Like, I get that. But the problem is that this is what and my point here is this is what we experienced to some degree in 2000. This isn't a bubble, so I'm not no doubt. I'm going to put a link to this article in here, and I also have another. It's like a news segment that I watch online a lot that explains it really well. But my point is that when we had this in 2008 and 9, this was people were buying these funds that existed that were based on bad loans, and when the loans went bad, then this all went south. It's not the same thing, but here's what can happen in this environment. If you have, say, 5 or 6 large equity companies, because again, we're not talking about the small guy. It's not like I've got a little hedge fund. No. These are multi-billion with a B dollar. Yes, these are big ones. Okay. So when you have these companies and these funds that are buying this real estate, well, what happens when we have a turn in the economy and people lose their jobs and they have issues paying rent? Because again, if you're not letting people own homes, or the availability of homes to be purchased is not as great as it used to be, and we become more of a renting society, right? And everybody's having to rent, just like everybody leases their car now. So if you have that situation come up, well, what happens when the economy takes a turn? People lose their jobs and can't afford to pay rent. Then if I'm an investment company and I'm looking at this as, well, this is my investment and I need a rate of return for my investors, okay, and this particular fund is tanking because my rents are late and I'm not collecting, what do?
They're going to sell it.
That's right.
Yeah.
You divest yourself of that money, right? You're gone. So now all of a sudden you've got 2,500, whatever amount of homes that are just thrust on the market immediately for sale. You dilute the supply and demand immediately when you do that. And all of a sudden you take home prices that have been going like this forever and they go. All
right. So moral of this story from Mike. Here's the moral of the story from what Mike is telling us. All right. So things are good right now, right? Yes. And it's cyclical, right? Everything changes, just like football, college football, Alabama. You're not always going to be on top. It's just a thing. It's cyclical. And please comment below if you have something on the contrary. So understand this. Store your eggs. Be prepared. Try to find a job that's kind of resistant to a lot of those changes. But store your eggs and be prepared, because there's going to be thousands, according to Mike and his article, there's going to be thousands at some point. Maybe not next year, maybe in 10 years, maybe in 4 years, maybe in 14 years. Store your eggs and buy a bunch of houses, and you are going to be loaded because you're going to buy them cheap, and then you're going to rent them out, and you're going to take the place of this guy, of these $1 billion deals. That's what I heard in all that was, I'm starting to store my eggs right now so I could be on a buying frenzy at the bottom.
Well, here's what I will say, in my opinion to anybody that I would talk to that's looking to buy a house, because we get these questions all the time, right? Well, is now the best time to buy because prices are going up and they just keep going up, and I feel like I'm buying at the top of the market and all that kind of stuff, right? We hear that all the time. What I'm saying, and again, I'm not going to argue what I think is good or bad about this, but what I'm saying is that if you're thinking about buying a house anytime soon, anywhere in the near future, there is no better time than right now, because it is not going to get less expensive. It's going to get more and more and more expensive. And really, it doesn't matter what market you're in. But I know, especially in my market in Texas, because like we talked about last week, everybody on the planet's trying to move here, right? Because of our tax laws and our business-friendly attitude, which I love.
And you're Texas.
Right. And we're Texas. We're amazing. It's the best state on the planet. But you're also having a similar thing happen in Nashville, Tennessee, and in your area as well. There are people flocking to these communities that are a little bit, coronavirus has, turned this whole world upside down. So, these policies that different states hold, but this is what we're seeing. When you have that kind of influx of people, and you have now investors, and you have pension funds all competing for the same finite resource, which is real estate, I'm telling you that if you want to own anything, you better start now, because it's not going to get better.
That's one thing. I was actually going to put a video out first of the week, because we have had a nice little reprieve from the deteriorating rate market, right?
Yes.
Today is, I hadn't looked at it in the last hour or two, but over the last 3 days, they've kind of leveled off, or maybe even gotten a little bit better, which is kind of unheard of in this crazy market that we're in right now. So I was actually going to put a video, because what you said is not only houses are getting more expensive, but interest rates are going up. That's a double whammy. So literally, I gave you a pre-approval January the 4th for $300,000. Right. Everything's staying the same. Credit, income, whatnot. I mean, interest rates rising and that house going up. You might not qualify, but for $255 in a month. And at the end of the day, we all know what $200,000 will get you in this market. It's their starter homes are $275 to $300 in our area anyway. So as far as new construction or whatnot, there are some existing homes out there that have maybe some issues or whatnot, or very small, whatnot. But a 1,000 square foot house is 200 plus,
That's right.
So to Mike's point, I was kind of joking on that, although it's always a good idea to store your eggs and be prepared for a potential opportunity, whatever the case may be. But no, there's no doubt that right now is the best time for that. And at the end of the day, that's the business we're in, but we're also in the information business. And that's where I think Mike and I both enjoy our job, is educating you to understand, hey, why did this happen? Like Mike started with the whole the pension part of it. I mean, that's us giving you information that we've gotten. That's why there's two of us on here, right? We're not just giving you Donnie's brain, we're giving you Donnie and Mike's brain. So that's something, a lot, maybe not much.
Not much. The point is just that, when you're looking at wealth creation and growth of your portfolio, or whatever you want to call it, or just getting started, the point of all this is that there is no better time than today, because it is not going to, and especially in our market, in our industry, I should say, this real estate, what's the old Mark Twain quote, right? Buy real estate, they're not making any more of it. Okay.
There's no doubt about it.
You have to understand the pressures that are occurring in this market. And for some of our realtor partners that we work with every day, this helps them explain stuff to their buyers to say, hey, look, I know this is the first time you've ever bought a house, and I know you just saw that house that was listed for $250, and you think it's trash, not worth $250, but I'm telling you right now, it's going to sell for $270. So you need to be aware of that, right? And it's what it said in this article too. One of the things that it mentioned, if I can pull it back up here, is that here. Let me read this one little sentence here. It says, I don't want to say anything about the bubble, but it says the firm expects home. And by the way, my article was from Fox Business, just so you know.
Okay, just by the way.
Yeah. The firm expects home prices to climb 12% this year on top of last year's 11% rise, an increase of at least 6% in 2022, a period of appreciation reminiscent of 2004 and 2005. So what I'm telling you is that it is straight up going that direction. Okay, so when you're buying a house and you want to make an offer and you think that house isn't worth it, there's 20 other people that think it's worth that plus 10%. So you just got to be aware of that. Yeah,
there's no real negotiation on the buyer's side anymore. No. You need to pay your own closing costs. You need to pray. You need to pray it appraises for more because you're offering more than the offer price. And you better close on time and get them your pre-approval letter, because they don't care. I mean, and I say that they do care, but they don't care because they got people, like Mike says, lined up. It's a tough market. What we need more than anything, and that's why I kind of perked up when you were talking about these potential rental conglomerates at some point needing to push some off, because that would even the market. I've thought about often when I'm mowing and I'm listening to somewhere between Nickelback and Jamie Johnson and the Foo Fighters.
Look, hang on, real quick. Okay, look, I love you. Okay, but you can't say Nickelback with Jamie Johnson and the Foo Fighters. Like, what are you talking about?
Two ignorant humans talking about stuff.